Good afternoon, traders. Hope you guys had a nice long weekend. This is the 21st of February, and at this stage of the game, obviously, you've seen the results of what this market is doing and where it's headed. And we came off of all these highs, and this was about pretty much due to make or break this market, which was around 4,100. It really did its best to stay above it. And, you know, this whole week right in here was really a strange trading sessions, and I think it was kind of a heads up. When the swings become so drastic, the market is trying to say something, and it worked itself pretty hard ever since the beginning of the year. I mean, we catapulted and we shot almost straight to 42, and we stayed between 41 and 42 for quite a while, and it absorbed a real lot of negative data in the process. And I always talk about, you know, don't get caught up in the hype and trade the facts. And I used to be more of a trader of opinion, and I realize that you got to leave it to the side because the market's going to always dictate. And all you can take advantage of, and this is what extreme trading is so much is about, is the opportunities it provides regardless of your opinion. And I've talked over and over about how it's whether or not I believe the market is capable of going higher or going lower. It's meaningless. It's being able to react to where the market shows signs of either being overbought or oversold, and how to take advantage of the price swings in between it to make money or make profits. When you look at the bigger picture, it helps out a great deal. And, obviously we failed these MAs, and this is obviously the target here, which I believe is, I am not even sure. Oh, that's a 50. And it's been quite a while. We haven't seen that. And you can see underneath is I believe the 200 lurking all the way down here. Yeah, so I mean, these are some pretty big areas. If in fact, I mean, this move is pretty obvious that everybody's bailing out and there's no interest. You might get a bounce, you might get a sell off down here and a late rally to take in profits, but be careful. This market's pretty much set the tone with what it's doing. And this is just an outlier day that the trend is overwhelming to the downside. Everybody's out of the pool. So you pay attention to these lower extremes. In here you got the two. This is the 200 in the Nasdaq right down here, and I believe it's probably got to be. This is the 100 MA. Pretty significant levels if in fact we do make our way down to it. This thing pretty much opened up around probably around 40.50, and that was a make or break point that we tried to hold on a couple occasions to take this market back up, and that was the dam break. There is a pretty sizable gap, but when that time comes, you'll address it. It goes from today's high somewhere around 50 something all the way up to 87. That would be the gap fill going back up to it if you get some really knee-jerk reaction in the next couple of days or a bounce off of this MA right here and maybe get some buyers. I just don't know. I think, you know, I think the fact is out, the reality is setting in that once again, the market got a little ahead of itself. These stocks are pushing high multiples. It's when you're reaching these levels, you're pricing for perfection. The market has been up 7%, when all the talk is that things are going to be difficult and most likely going to be minimal in regards to returns, and yet the trading just kept pushing it and pushing it. And these 2 days were kind of interesting because it was a State of the Union, which I understand really for that alone. But the number that came out, I can't remember, it was CPI, PPI, something came out that was really negative. And I remember we opened up, we rolled them, and then we came all the way back. And that one never made sense to me. And then you could see that they tried to hold it, and then the reality just sets in. I mean, the market can only price in so much. And I think all of this movement was based on the fact that, they knew what the Fed was driving for. And they felt once those last few rate hikes came in, it was done. And nobody took into account what might be happening down the road. And that's what has occurred. It's like these negative, the markets have these numbers the data keeps coming in, and it's robust. It continues to accelerate, and that's not what the Fed needs to see right now. And I think sometimes traders get a little overexcited. They think it's done. I mean, I was here and talk about how some felt there'd be a rate cut, which didn't make no sense to me. But people get caught up in it, and then they drive it. They get a little follow through, and once it gets overbought, the institutions come in and they slap it down a little bit. And obviously they tested 4,100 a bunch of times and it provided value longs from that. But that was just the market fighting the range. And eventually it broke out of this wedge to the downside to where we're at now. So, yeah, all this is that the bear market is just pretty much telling you it's still intact. And we're just going to have to let this play out and let the markets try to maybe eventually factor in the up and coming rate hikes. But that's the big X factor. It's the uncertainty. I mean, we know they're going to raise them a little bit more, but what happens if the numbers continue to come in negative and have an impact on inflation in a negative way? All it's going to do is make the Fed's job even harder. So, I think, when as a trader, you can't get caught up in what, everybody else is doing and, let the market factor everything in. I think this is good for the market. I think the market will come back down and everything there'll be more in balance. And, maybe the market will have a better opportunity of having a legitimate bounce and rally to provide a decent return. I don't think there's going to be 10, 50% return on your equities positions. I don't think the market's set up that way. Could be, a tough year for the market. So you got to be careful. But if you're trading futures, there's great opportunities here. So this is what it's all about. Take advantage of the locations and, patiently wait and take a shot at it, make a little money around it all. So this is, it's just a brief update. I mean, there's nothing I can tell you that isn't right in front of you right now. I'm just, I said, be smart as a trader. Don't get caught up in it. Trade the facts. The facts are the market's going to dictate where it wants to go. And it's your job as a trader to react to the locations. And what is it telling you when it gets to these locations? You know, when the market gets to a point that gets, say, we run them up where it gets a little overbought, you want to see how it reacts to this level when it gets up here. Don't get on board with everybody else because they're buying it up here. Usually the best trades are the trades that nobody wants. So, in case in point, that might be down here. But, what a day like today, I'm not sure I'd be stepping in front of it unless it was really late. And it looked like an opportunity for profit taking from this whole sell off. That's possible. But unfortunately, this is going to have a ripple effect because of the fact that we're taking it down. And, it's happening in an hour time, and we haven't even got to the overnight session. So just going to have to wait and see. Usually, just how the downside comes. It comes and it comes hard. I believe we started the year at around 3,900, and that could be very possible where we're headed, somewhere down in here, I think. So be patient and trade with confidence. Guys, have a great week. Take care.